Let's move on to the conversation to Aishwarya Dadid, who's the founder and CIO of Fident Asset Management. Hope I've got that right. But Aishwarya, what do you make out of the current market situation? It's a bit of gains that we've seen. Of course, there is a sense of consolidation which is also prevailing. FIIs continue to be the sellers in the market. There is no respite coming in from that one. But how are you looking at it, especially by the end as we head towards the year end where the activity of FII usually is a bit slow? How are you looking at it?
Thank you so much for having me here, and good morning to all the viewers. Obviously, we had seen a very roller coaster year so far. You are aptly correct that we have seen that FI have been sailor so far. So if you look at last calendar year, we saw almost close to more than $17 billion of outflows. And this year, we have been not been able to recover that. So we have seen so far close to $12 billion of inflow in the equity market from the FIs. But what is heartening to see in the recent weeks is, possibly because of a very, I would say, a sanguine message from the Fed and the possible what we have seen on the yield curve moving from almost close to 5% to 4.4% yesterday. There has been some respite on FI selling. So if you just see the month of September and October, we have roughly seen $5 billion of outflows. But November so far, it's more or less flattish. I think there will be a negative number of not more than $150 million. So it's a clear sign that there's a risk on sentiment globally, which is creeping in, and it bodes very well for emerging markets. If you look at markets like Taiwan, we look at South Korea, they've got good share of inflows into the market recently. India has not been a big beneficiary of that, in spite of a very good quarterly results that we have witnessed. One of the reasons which comes to my mind is, the FIs believe that possibly there's a state election which will set the pretext for the national election, which is due next year. Possibly there will be some volatility that might come in the short term because of that, and they might be more watchful about this. But I think apart from that, this clear risk on sentiment should all rub up on Indian market. One more important point, if you look at it in very, very short term, say 1 month data for major markets across the globe, see, your Nasdaq is almost a 22-month high. I think in the last 1 month, Nasdaq is to sell up 10% or so. Your other leading markets in US, whether it is S&P and Dow, are up almost 7-8%. European markets are up 7% in the last 1 month. Even if you look at China, which has been a drag, is up 4%. Taiwan, Korea is up 4 to 6%. Indian market is flat last 1 month, in spite of a good quarter. So it's more because of possibly there's some element of advice who believe India is still expensive compared to other emerging markets. But I personally believe that this state election possibly is, holding them back to turn things around. And as you rightly said, we are just close to this year, and with December is normally a very late month. So we don't expect very high flurry pulling out in this month, but possibly we see the end of aggressive FI selling from here onwards.
Sure. I would also want to chat with you about the bunch of IPOs which actually are going to open, and one of it has already opened in today, that is IRE Day. That's the one probably that's opened in today. Tata Technologies is another one. Flair Writing Instruments is also going to be opening in for subscription tomorrow. Your view, what are you looking at? Of course, between all of them, I'm sure you will have a view for Tata Technologies, but what about the other ones?
So it's a right time for the IPOs. This calendar year, we have seen a flurry of IPO, and a lot of wealth has been created from that perspective. On the coming down, so obviously Tata is a unique, because one of the rare IPOs from the Tata is coming after many years, which is creating all the frenzy about this business. But if you look at for the other businesses which are coming, especially say IDA and Flares and things like that, majority of them have got a good, I would say, interest in the retail segment. And most likely these IPOs are expected to sell through very easily. Obviously there is some very strong knack about each of these businesses, specifically to say, we spoke about IDI, then this is one of the lowest, cost of, I would say the top 3 lowest finance company which has a lower cost of funds, which possibly have the possibility to create higher ROEs in the coming time if this momentum of investment keep going through. So these are all beautiful stories, which investors can look at. I would not advise investors to come into this IPO for short-term use. I would be more interested to buy into these names with a longer term horizon, where these businesses have competitive advantages, where they can sustain their ROEs. And obviously we know that IPO valuations are a bit always stretched. And for any investors to make any meaningful wealth out of them, you have to be stick them with for longer. And it's only workable when you invest into high quality businesses with competitive advantages, rather than just throwing money here and there.
Sure. The last question that I have is, perhaps, do you see a narrowing of gap between Tata Technologies and KPIT? Clearly, it's been, the revenue growth targets and the valuations at least seem to be right now, in the favor of KPIT, which seems to be enjoying in valuations given the kind of revenue growth and the margins it has enjoyed thus far, as compared to some of the other mid-cap names, and also Tata Technologies over the last 3 years. What do you make out of it?
It's a very good question, I would say. It's a very tricky one. See, these are the two businesses in this segment which are into auto parts and aerospace, and doing ERD into all the space. But, the kind of the pedigree Tata enjoys makes a very compelling case for them to have a lofty valuations too, because of the consistency of the numbers over the last 3 years. And as I said, the great management and the great legacy that they carries with them. But looking at the valuations of KPIT, you can all make it out from the way I'm speaking around. But the valuations of KPIT are, I would say, very, very stretched. And putting an analogy to that related to Tata's, I would say it's like a fourth story being incubated rather than anything substantial. So if you ask me, can it happen? I won't deny that, but I would be watchful of it if it happens. Obviously they should get at least, if not full valuations, at least 60-70% of what KPI is trading at, or it. And even if that happens, I think investors can get a lot of wealth. But one has to be watchful of how valuations will pan out for both of discounted. Because see, ERD as a business specifically doesn't have that kind of consistent ROE accretion capabilities compared to what a core IT businesses have. So one has to be watchful of that thing. And we really are happy to see the consistency these companies are progressing well. But stretch valuation is always an issue to us.
Sure. We're just going to leave it at that. And thank you so much for taking out the time and having a conversation with us this morning.
Thank you. Thank you so much for having me. Thanks.